so happy that you joined us here on this Sunday. We're going to do a really good job of keeping this like effective and efficient, but welcome to our first deep dive that the DMG is going to present. We're going to do kind of virtual discussions on topics that are super, super important to our clients and our communities. With 5 offices, Winnetka, Lake Forest, Chicago, Hinsdale, and Naples, Florida, we get to see this pandemic and how it impacts all of our communities, from the city to the suburbs to secondary markets. Of course, nothing is more important right now than together beating this virus. And everyone's goal right now is to stay healthy and keep others around us healthy. But we all know that the real estate market is a necessary economic driver. It's the way we live. It's the place we live. There's no place like home. And for some people, it's an obsession. Everybody's curious about real estate and design. You see that on TV all the time. So even during this pandemic, homes are being sold, believe it or not, and they're being seen, and people are still browsing listings, and probably now more than ever, really diving in to technology and seeing things from a different perspective. So right now we have a captive audience, which is kind of good for us. So right now, I'm so grateful that I have all of these people joining us today. Hopefully, you will gain incredible insight and incredible experience that you probably wouldn't get anywhere else. So I'm thankful, and I'm thankful you joined, and I'm thankful to my esteemed panel that they joined us. So first of all, I'm very, very proud to have my CEO. He's the CEO of Coldwell Real Estate Worldwide, Ryan Gorman. I've got Sue Rezin. She's our Illinois Senator from the 38th District. She's a great legislator, but probably an even better mother. She is the mother of Tori Rezin, my city team member. We have Paul Garver, who's literally in the trenches every day with us. He's our go-to legal guy. He's just awesome at practical guidance and a wealth of knowledge. And then if Paul's in the trenches with us, we've got Jeff Dulla, who's feeding all the ammunition to Paul. He knows everything there is to know about the mortgage industry, how it's affecting us, him, you, all of us. And he sees it from a broad perspective because he's a broker. So he sees the big banks, the middle banks, the self-portfolio, you name it. He's amazing. So without further ado, I'm going to have each of the panelists introduce themselves, give a little background, and how the coronavirus is affecting their work. So Ryan, you're first off.
Thank you very much, Dawn. Greeting everyone. Thank you for joining us here on Sunday. I'll try to be quick with the introductions because I think we want to get to the questions, I'm sure. So Coldwell, for a little bit of perspective, we have about 100,000 people around the world. We're in 44 countries. The majority of our folks are here in the United States, but we have a lot of affiliates in places like China and Italy where COVID-19 hit first. So we've been in direct communication with those folks to get some perspective all along the way. We've also been working very closely with the government ahead of the first, second, and now third and largest stimulus package approvals. So working with our senators and legislators federally as well as locally, as well as the chamber, NAR, and others to make sure that the final stimulus package, now the CARES Act, which was signed into law, reflects everything that we thought was important, including a lot of learnings from 2008. So we're excited to talk a little bit more about that today, and there's a lot of really great information that we can share. More locally, we've been focusing on these stay-at-home and shelter-in-place orders, which have been rolling around the country. Number one, interpreting them for our people and making sure that closings can still take place, which I'm happy to say we've successfully been able to do in every state in the union. And in fact, closings are taking place every single day, including today, which is a little more unusual, but because of unusual times, we are closing through just about everything today. We've also got order clarification, including most recently yesterday with the Homeland Security, Cyber and Infrastructure team. They have what's called Essential Services list that a lot of orders have referenced. And yesterday, we and National Association of Realtors and others were able to get that clarified. So real estate, which we all know shelter and housing is essential, but now real estate is listed as an essential service under CISA, which that's hot off the press as of yesterday, and that will make a pretty big difference in terms of us being able to keep America moving. So lots more to talk about, but that's sort of the most pressing and newest information from the last few days.
Sounds great. Okay, Sue, can you please give us a little background on yourself and your impressions on the way Illinois legislative and executive branches have been handling this crisis?
Sure. Well, thank you, John, for hosting this town hall. I think it's, the world as we know it for the next several months as well, that we'll be hosting town halls to get information out. I appreciate your leadership to the realtors in this issue. It's important because my office as a state senator, I'm receiving questions each and every day about, what happens if. I did have somebody in my district reach out and say, you know what, my house is for sale. I'm not comfortable with people walking through my house currently because I don't know if they're infected. My office receives those questions every day. And we are, since March 21st, and the governor issued his his executive order for stay-at-home shelter in place, our lives have changed. And we as government officials are trying to catch up. We're trying to put a process in place for the economy from one end to the other about what it looks like, and also to answer these questions as well. I do think it's important to, just put out a couple facts. Why are we here? Why do we have our shelter in place? This virus is incredibly contagious. I was just on the phone yesterday with the head of the Med Society. This virus is easily spread. There's no vaccination, no cure, easily spread, and unfortunately, it's fatal. That's why we are taking these very serious steps at the state level and at the national level to slow the bend of the curve. I know many of you have seen this graph on TV. What we're trying to do is make sure that our healthcare system is not overrun by people that need access to hospital beds, need access to ICUs and ventilators. That's why we're taking these, what are considered drastic steps to slow that curve, so our hospitals are not overrun. The doctor also said that in the next year, over 80 to 90% of our population will have the virus. Some people may not know that they have the virus, but of the 80 to 90%, 15% will be hospitalized. Of those 15%, 5% will need ICUs, and of that 5%, the mortality rate will be between 1 and 3%. Those are very serious numbers. That's why currently we are putting in place a kind of a triage hospital beds at McCormick Place as we speak. We hope we won't need it, but those are some of the things that the state of Illinois is doing to prepare for this potential outbreak.
Sounds great. Thank you so much, Sue, for that really detailed explanation. It's helpful. Okay, Paul, you're next. Can you talk about the calls you've been getting and where people are from your perspective?
Absolutely, yeah. Thanks, Don. And first of all, thanks for doing this today. This is a great forum to be able to reach out to people. And like we were talking about before, if there is any silver lining to everything that's going on right now, it's that everyone is exploring opportunities like this, and I think we're only going to see these types of events, these types of ways of reaching out to people continue in the future. So I appreciate being part of this today. Obviously my name is Paul Garver. I'm with Hawbecker and Garver. We are attorneys. We practice real estate and estate planning. There's 5 attorneys in my office that purely practice real estate. I have 1 attorney that practices real estate and estate planning. Obviously, since this has started, the title companies have drastically changed how they're dealing with the people that come to closing. And that's, we get a ton of, right now, a ton of calls about that. We do have some clients who are immunocompromised. We have, some other things that are going on with our clients that are preventing them from actually coming to the closings when they're the buyers. So you got to try to find a way to make that work for both your buyers so that can happen. The first step that the title companies have started to do is they have said that sellers, attorneys, agents, all of them are not to come to closing. Really, the only people that are to come to closing are the buyer's attorney and the buyers at this point. Generally, you're going to be in a separate room from the closer. You're either going to bring your own pen, or they're going to give you a brand new pen, which they will encourage you to take away or throw away when you're done with it. So they are taking steps. Every title company is taking some steps to see some of these things, to take the necessary precautions. We are being very aware of social distancing when we're at the closings. And we do that. Now, this past Thursday, something that very interesting happened, and we can touch on this later, but the governor put into effect Executive Order 2020-14, which is going to allow us to do remote notarization. It's not going to allow for electronic signature, but it's going to allow us to do remote notarization. In our office, we're going to be doing our first remote notarization on a power of attorney for an immunocompromised buyer client tomorrow. And then we'll be using that power of attorney to close the transaction for her. So those are some of those things that have come up. Now, of course, the other questions that are happening in the office are what happens if I lose my job? What happens if I suddenly don't have the money to do the purchase, to do those, to do those types of things? Of course, Jeff's going to be able to speak to that as well. I'm sure he's getting a lot of those same questions, and Don, I know you are, but really there are protections in almost every contract that you have, even if there isn't a coronavirus or a COVID-19 specific addendum to the contract. There is generally protections that you have, a loan contingency, or some contracts call it a mortgage contingency, so that you have the ability to get out of the contract should your financial situation change so drastically that you wouldn't be able to qualify for the mortgage and you get your earnest money back. So I don't want to take any more time now, but those are just a few things that are going on.
That's awesome. Thank you so much for that perspective. Okay, Jeff, how about you? I know it's hard. Tell them a little bit about your background yourself, but also hit a couple of the big things that are coming up. I personally have some questions for all of you, and a lot of people have kind of previous to joining sent literally like loads and loads of questions, and I see more and more coming up on chats as you guys talk. So I'm going to be hitting you guys with some pretty hard questions. But Jeff, go ahead. Your turn.
Thank you. I appreciate the opportunity for being on here. I just had ACL surgery 2 weeks ago, so I also appreciate the excuse to put on real clothes finally for once. So I am Jeff Dulla. I'm a Vice President of Mortgage Lending with United Home Loans. It's a family-owned mortgage bank with offices in Westchester, Chicago, and Nashville. We've been in the business for, I think, 18 years as of this April. I've been with the company going on 13 years this year. So we've seen a lot. We've seen, the time frame of probably the biggest changes to the mortgage business, which was post 2008. So we know kind of what's to come in terms of a situation of fluidity and adapting to things as we go. First and foremost, I think our biggest wish with all of this is to help be a part of a quick solution to this, this terrible virus, and do what we can, stay at home and assist in any way we can in getting through this. There's nothing good when you have this many people affected from a health standpoint. With that said, I don't think you can deny that there's going to be a lot of confusion, but there's going to be also a lot of opportunity that comes and arises from this that people will be able to take advantage of. The biggest thing with COVID-19 is the effect on the markets, the stock market, and in effect on the bond market, and that's one of the things that's helping to keep interest rates low. The other is the Fed, basically promising a limitless amount of bond purchasing. Mortgage bonds are what actually dictate interest rates to go up or down, and so you're going to see interest rates stay low for this 6 months plus. There's some confusion because they're not quite there right now, and I'll touch upon that in a little bit. But that's one of the main benefits. You've also seen what Paul was talking about, curbside closings and things like that are probably one of the opportunities that this might create is pushing us to a point that this business has been kind of knocking on for a while, which is e-notes, e-closings. You're talking about external and virtual appraisals. You're talking about a lot of things you guys are doing, virtual showings. These are all things that could be a benefit of what's going on right now, last far into the future, and hopefully better, things for the entire business. The last piece I'll talk about right now is the immediate impact on, homeowners, buyers, sellers is probably in the form on my end in terms of interest rates. And again, confusion as to where they're at, because right now rates are not as low as they're supposed to be. The news, people are watching the news and they're actually getting the correct information. Where bonds are at right now, where mortgage bonds are at, rates should be much lower. The reason that they're not is that there was such a push in application volume the first week of March that there's only so many people in the entire industry. And even if you wanted to, all the large companies wanted to hire people and train them up, it would still take 3 to 6 months to start pushing through a lot of the inventory, a lot of the volume that was taken on. And so, long story short, banks have rates at an artificially high, level. You've got that. You've also got some concerns with liquidity, forbearance, and potential defaults and things to come with unemployment. So, long story short, rates are a little bit higher. They're probably going to come down. They're probably going to stay down for a little bit. What can you do? You can prepare your income docs, pay stubs, bank statements, all that kind of stuff. You can do a loan application with your lender. You can get everything ready to go. And they're not lying to you. Interest rates are not where they should be. So just have some patience. Keep your head. Obviously, everybody needs to keep their head through these times. Get ready to go so that when they do drop, you can either buy, you can refinance, you can do whatever. So that's my take on that.
That sounds great. Okay, thanks so much to all of you guys. It's really helpful insight. Okay, so we're going to get to some questions. We've got a lot of them. We're going to try to, we can't answer all of them, you guys, in this type of forum, but I promise you this, and I can speak on behalf of my panelists because they've already told me this, that if you guys have any questions at all, you can DM me on Instagram or you can email me or call me, and I'll funnel it out to the appropriate people to get your questions answered. We're committed to this, and we're here for you. So let's go with the first one. Okay. Sue, this question is for you. Let's see what they say. They're coming. Oh, this is from Florida. What qualifies as an essential business or an essential worker? You're muted.
Thank you. The list is long regarding essential businesses or essential workers. We wanted to make sure that despite, issuing a stay-at-home order, we have to make sure our supply chain continues. We need to make sure that there's food in the grocery stores, that there's gas for the trucks and the cars to be able to move products so we can get the products that we need in order to, acknowledge the stay-at-home in place. So the list is long. The realtors were included in the governor's EO, the executive order, which was issued, but the list looks something like this: healthcare and public health operations, human services, essential infrastructure, stores that sell groceries and medicine, food, beverage, cannabis production, which is interesting to me, agriculture, and the list goes on and on. I think it's easier to say who is not on the essential business list. Nail salons are not included. Nail salons, hair salons, gyms. So it's just easier. Many people that had those questions that are manufacturing throughout my district actually fall within the essential business list. If there's any questions, there's clearly a website, there's clearly a link to see, but I think that those questions have been answered. Why at that point was Florida different regarding essential businesses and did not include real estate? That has changed, as Ryan has said, as of yesterday at the federal level. Homeland Security added real estate to their list of essential businesses, which is a step in the right direction. Up until then, each state was dependent on whatever their governor and the administration decided to add to the list. So I'm glad to see that real estate was added at the federal level. You'll continue also to see many changes as we go forward, not at the state level, but also at the federal level as well.
Sounds great. Ryan, can you kind of piggyback off that a little bit? Because I know that, obviously a lot of my team members have multiple licenses, Wisconsin, Illinois, and Florida. And it's kind of interesting from that perspective. Can you talk from a global standpoint, say, United States standpoint, how that affected what was going on here? Because one was essential, one wasn't. That put you in probably a precarious situation. Talk about it, please.
Sure. So there are orders all around the country. Of the 50 states, right now there are only 5 states that do not have any order in place. Every other state has at least a state, county, or city level order. Many of those orders reference other reference points. So Homeland Security's CISA list, that cybersecurity infrastructure list, that's the most common one that we were just referring to. Probably 17, 18 states refer to that list, and lots of counties refer to it as well. That's where real estate closing related activities were previously on the list, but the broader group of real estate activities was not. A lot of what our conversations were with governments, city, county, and state, were that if you want closings to continue, which you should because they are essential, they're related to shelter, they're related to housing, and they're related to financial security for a lot of individuals, and they're proximate to banking transactions. So if you want them to continue, then we need things like home inspectors and those ancillary to the transaction but necessary for the closing. So they heard us on that. They've amended most of the lists. There are some lists that are still more extreme, but usually those were in areas where all consumers are asked to basically not leave their homes except for food or healthcare. Almost everywhere else we've been successful in helping them to understand. And I got to say, obviously your local legislators, Sue, and many others have been extremely responsive to us. And I spent last week on the phone with many legislators around the country. They're very, very comfortable getting our feedback, understanding what's necessary to keep America moving, and then making those changes very responsibly, including a lot of governor's offices moving really quickly. So everyone wants to make sure that folks stay safe, but the transactions can continue because they have a high realization of how impactful it can be when transactions start to come apart and impact a lot of lives around the country, and perhaps even keep people from getting where they need to be able to stay at home. So they've been extremely, extremely responsive, and you'll see more of that tomorrow. Actually, there are a number of orders that will be updated tomorrow.
Great. Awesome. Okay, great. Awesome. Okay, Paul, this one's for you. Can I make my realtor or anyone else that wants to come into my house take their temperature, wear gloves, wear a mask? What are the legal implications of this?
Well, that's an interesting one. Yeah. We are in the Wild West right now of what's going on with this particular issue. And it's going to come down to reasonability. I mean, Don, when you have buyers right now coming in, or when you, in the past, I should say, had buyers coming in for an open house, some sellers are comfortable with them not putting booties on their feet. Some sellers are comfortable with them or want booties put on their feet, for example. I think we can look to that sort of as a guidepost here. I think for sure, if you have gloves and masks and you can distribute those, I think you could put up that as a reasonable requirement given the situation of what's going on in the world today. I think when you start to get into stuff like medical information and things that might conflict with the HIPAA laws, which are healthcare privacy laws, and other things of that nature, that's where we start to have some problems. And also realize that when we're talking about all of this, in order to comply with all the fair housing laws out there, we're going to have to evenly apply it across everybody that comes in, which really makes a lot of things difficult to handle if you're going to kind of impose these types of restrictions on buyers coming in. Don, I know you've been talking about the virtual showings that you've been doing and things of that nature. It seems that is a better alternative, in my opinion. And then at least for a first showing with as many buyers as possible. And then as you get to more serious buyers, people who have shown that they have the financing and qualification in place, move that set of kind of secondary buyers into the spot where they can come take a look at the home then. And I think you can start doing things like a questionnaire out to them to make sure that they haven't been in contact with anyone, things of that nature that they could fill out. And I think you can keep that a little bit more tight and selective when you're moving to kind of more secondary qualified buyers as they're saying, yep, we've seen the home virtually, now we're serious about it, we want to move forward. That would be my take on that.
So do you have a form for brokers to do this? And Ryan, if you want to jump in here too, does that make sense? I mean, I know that with Don McKenna Group, we're doing everything we can to keep our clients and buyers safe and ourselves safe, but is there like a protocol, maybe a form? I know there's a Corona addendum now to some of these forms for extensions. Is there a form that brokers should be looking at some type and getting to buyers? I know now more than ever, people are vetting a little more, like where are your buyers in the process? So in other words, if they're just taking a Sunday stroll and they need to sell their house in order to buy, right, that's a want, not a need, which is very different. But I'm just curious on what both of you guys think from that perspective. Does that make sense? Where obviously from a Fair Housing Act, we have to do everything the same for everybody. Maybe that is something that we should put into place where we send it so at least we've dotted that I, or is that too much?
I'll just amplify what Paul mentioned. I mean, the fair housing is a perfect thing to point to, and it's also makes a ton of sense from just a health and safety perspective, right? So you have no idea, really. I mean, initially there were some reports of folks saying anybody who came from a certain area, who had recently traveled to certain countries, they wanted them to do certain things. The fact is now the virus is around the country, right? So that it doesn't make sense to even attempt to qualify in that particular way. So applying something fairly makes the most sense. In terms of forms, there's two types that I've seen folks using. Paul can speak to what the force of law of either one of them are, which I think is somewhat suspect, but Paul can speak to it. The two are, one is sort of notice that the owner would not like anyone to come in who has any reason to believe that they've come into recent contact with the virus or that they are currently symptomatic. So that's a pure notice. Another is an attestation, where anyone coming into the home is then actually attesting to essentially to the seller and to the Dulla McKenna group, for instance, that they are not symptomatic and they have no reason to believe that they've been recently exposed. Now, Paul can speak to what the enforceability of that is. I think the actual effect is just increasing awareness and decreasing the likelihood that someone would sort of take that additional step, take that additional risk. Of course, we have no idea if people are being honest, but we hope right now that they have every interest in keeping themselves healthy, as well as anyone else. So that's just one more step that some have been adding.
Makes sense. Okay, Jeff, this is for you. And it's interesting. I've seen this even on my own team right now, things that we had in place. The question is appraisals. Will appraisers be altering their process if they can't get physically into the house? And it's a two-part question. And will appraisers start factoring in discounts since some prices may decrease over the next few months? I can repeat it too. So if you want to do the first part, will they be altering the process of how they do things?
Yep, I think I got it. So altering the process, yes, for certain, no matter what. But what you are seeing is you're seeing a different interpretation of what needs to be done depending on what kind of loan product it is or who it's being fed into. So, for instance, like Freddie Mac's interpretation of the rule is probably the most lenient. So you're going to see, external procedure with no interaction, at least in person, probably involved. Then you've got all different types of loan products out there, and some banks are saying we're not ready to go completely external yet. And so for those instances, you're going to have the appraiser. I mean, obviously it's going to be completely up to the client, but you're going to have the appraiser going to try to go inspect the property. They're going to expedite the process. They're going to wear gloves and masks. They're going to limit touching anything in a doorknob or whatever. They're going to probably facilitate the interview process, maybe outside at a distance and keeping proximity. So if if the bank is trying to enforce that type of thing, that's obviously going to be up to the client. For the rest of them, like I said, for Freddie and a lot of the conforming loan stuff, you probably will see a complete hopeful shift to an external or virtual interview process done over the phone, maybe texting of photos, emailing of photos, and things like that. So that's how the process is changing, and probably will move more to that direction. And I think that's probably a positive, again, impact from this, not only for now, but also just to help with the safety and health of people going forward, so that people don't have to worry about a stranger coming into their house necessarily, and also for the safety of the appraiser or realtors going into somebody's house that they don't know. Impact on values, and I'm going to sound like a broken record saying this over and over again, but this is a fluid and changing situation, so I don't think we know yet. If you think of an appraisal, it's comparative analysis of closed comps, so looking backwards. By nature, this is looking backwards. And so we're not going to see the impact necessarily of right now until 2-3 months in the future. I think you're going to see a shift of, in this moment right now, you're going to see a shift of weighted information on the appraisal towards listings, towards pendings. I think you're going to see some of that information weighed more heavily. What's sitting there? What price is it at? And that could come into play. You also have some markets, like you can't blanket anything and say Chicago's just this or that. Obviously, it's very neighborhood specific. It's very town specific. Western Springs is a good example. I think in March, it's showing a trend of appreciating 3 to 4%. That probably would have been what's called a time adjustment on the appraisal for value, meaning the end value of the property would go up because of that.
Right.
Right now, they're going to probably hold off on that, or they might hold off on that depending on what active listings and pendings look like in the next month or so. And that might end up nullifying some of that movement upward. So I think it's a shifting, fluid situation right now.
Dawn, can I add on to that?
Yeah, I'd love it.
So just I want to caution everyone, for some people have seen a little bit of shifting in sort of average sales prices in a few different marketplaces, and it looks like prices are coming down. What I'm seeing and looking at data all over the country, our own as well as all the MLS data, is that that's not really the case. What's happening is there's a shift in mix. So the higher end properties, some owners have chosen to do something different, maybe to take it off the market briefly, or to keep it on the market, but to make a few different changes or modifications, or perhaps to stay in vacation homes that were typically higher end properties. And so the mix of properties that you see is maybe those vacation homes are coming off the market because people are staying in them. That changes the average sales price, but exactly to what Jeff just said, it's not actually changing the anticipated value of any of the individual properties on the market. It's just shifting sort of the mix that lands with the average. It's always dangerous to look at the averages, but I just wanted to highlight that because I've seen some relatively misleading headlines out there that don't actually match the underlying data of what we're actually seeing happen.
Yeah, I agree with that firsthand, for sure. You guys, can I piggyback on that question? So do you think cash buyers have more of a leverage right now?
I'd say, I'll add, cash buyers, I think, have a leverage opportunity in any market. And at a time when uncertainty is higher, that leverage increases, right? So whether the uncertainty is real or perceived in terms of someone's ability to follow through on a transaction, right now there's a feeling by many consumers there's an increase in uncertainty. So I think cash buyers' leverage has increased in the most recent, especially week, I'd say.
Yeah, I agree. Okay, Sue, two-part question. This is a very broad question. So this is coming from somebody in Winnetka, and they want to know, how is the state of Illinois going to help Illinois residents get through this? And she also wants to know how is the state helping those small businesses in Illinois?
Mm-hmm. Well, again, thank you for those questions. I think it's fair to say, first of all, that I was on the phone with the governor on Saturday. I asked him, when does he think that this will peak? When will you see that curve that they've talked about? And he mentioned that he feels the time frame, according to all of the data that he's collecting, will be at the end of April, beginning of May. So what does that mean for citizens? Well, the executive order is only good for 30 days. So the previous stay-at-home executive order that the governor signed will be finished on April 7th. I'm assuming, I don't know, but I'm assuming that you will see another executive order doing the same, being that the data is showing us that the curve, that the huge influx that we're anticipating in the healthcare system will be towards the end of April. The good news is, though, that by practicing everything that we're seeing here, social distancing, stay at home, make sure you're washing your hands, will help to lessen the curve and help us to get out of where we are quicker. I'd rather have restrictions in a smaller amount of time than have less restrictions through the entire summer. So that's our goal as we speak. What are we doing to help individuals? There's several things, executive orders that have been passed. First of all, unemployment insurance, individuals without access to paid sick leave or who are unable to work due to COVID-19 can apply for unemployment insurance. The governor's executive order also waived the 7-day waiting period to help residents who have been told that you're laid off, which is unfortunate. And so we're trying to help them. The federal stimulus package that was just passed, also there's some provisions and benefits in there to help with the unemployment. We're going to see that spike for the next month or two. And we want to make sure that we are positioned to get the small businesses, people who are most affected by the COVID crisis, back to work as soon as possible. Also, the federal income tax filing and the state income tax filing payment deadline has been extended from April 15th to July 15th. So that will help many people who may not have the cash flow available on April 15th to postpone it until July 15th, which by then we hope that we are starting to come out of where we are. Also, the governor signed another executive order pausing the enforcements for residential evictions until April 8th. I don't know if he will sign another executive order extending that. My guess would be yes. Also, the ICC, the Illinois Commerce Commission, is working with all of the utilities to make sure that there's no disconnection from utilities until we get through this crisis. That's on the individual side. On the business side, we as a state have been rolling out different avenues for people to apply for small business loans. The SBA, obviously many of you have heard about applying for small business loans through the SBA. I have been asked on my Facebook Lives, I have cash flow. I'm a small business. I have cash flow for about a month, but after that, because I'm not sure how long this will go on, should I then apply when I feel that I'll need it? The answer, and I had the head of the Illinois Chamber of Commerce, Todd Meisch, and also the Illinois Retail Merchants, Rob Carr, on a conference call that I had, and they said, absolutely apply today, because it will take about 30 days to get an answer. Then you can decide if you're going to take the small loan, but you need to be in the queue. So apply today. It's onerous. I get it. I've heard back from people. There is a lot of paperwork. You do have to, put your financials out there. This is federal money. But if you want to make sure you're in the queue and you don't know where you'll be in a month with your cash flow, apply today.
Makes sense. That's great. That was awesome. Thank you. That was like, let's cut through the fat and break it down for everybody so everybody understands what they're saying. Okay, a couple more and then we'll be good to go. Paul, can and should realtors continue to conduct physical showings or hold open houses? This is very confusing now. We're essential, but we're trying to make sure that we don't infect or get infected. What are our legal rights, and what if we come in contact with something or infect somebody? How does this work?
Giving me the tough questions today,
Sorry.
Don. That's okay. Yeah, I mean, I think this comes down to, again, as we talked about earlier, this is a new frontier for us. I do think that owners, can say, hey, I don't want to do open houses. Don, this as, just from your experience in real estate, pre-coronavirus, you would have some sellers that wouldn't want to do open houses pre-coronavirus. And I think you're in the same boat, as you were then now. If the sellers are saying, I don't want to do these, you clearly don't have to do them. And I don't think it's, in the current environment, is it the smartest thing to do? I think that we probably would get into, there could be an entire webinar just based upon that. But with the technology that's available, with the things that I've seen out there, I do think that people should at the very least evaluate those options first before coming to the conclusion that they want to do a live open house, right? We all know everything, every time you step outside, there's risks associated with it. What we're trying to do, and I know Sue hit on this a lot earlier, is try not to take the risks that we don't need to take. And if you can handle this in some sort of way, through the technology that's available, through the things that are out there now, which are just incredible, without physically having people come to the house, at least for an open house. Of course, as they become qualified buyers, as they move through the process and become more serious about it, then, bringing them to the house is going to be a necessity. But then taking, all the necessary precautions that you need to take, that's the smart way to go about it, and I think you really, really minimize the risk if you're doing that, if not almost eliminate it if you're handling these things correctly. So yeah, I think that's where that question lies. The legalities of giving the coronavirus to somebody else, there's probably going to be years of sorting that out. I'm not going to lie. I'm not sure that I'm going to be able to give a good answer to that today on it. But, as we have heard, the predictions here is that, all of us at some point in the future are either going to be a carrier or have it or something of that nature. So it's going to be unlikely, I think, that people are going to be able to make something like that stick. But that's just my own personal opinion on it.
Well said. Well said. Okay, so we've got time for a couple more. It's interesting. This comes from Lincoln Park, downtown Chicago. It says, how long will this is for Ryan, and anybody else who wants to jump in and piggyback off Ryan, that's fine. How long will it take for the economy to bounce back after the immediate crisis, in your opinion? Since you're at the helm of this real estate company, and the real estate economy has a trickle-down effect, like how long do you think it's going to take to have that upward trend?
Sure. Well, I can say we're spending a lot of time running scenarios. Forecasting is extremely difficult. I've referred to it as multivariate calculus. It requires us to know a few different things. One, we know a lot more about the virus now than we did even 3 weeks ago, and that's been extremely helpful. Two, we know a little bit more, not as much as we need to, but a little bit more about what our sort of national response will be. I don't just mean federal government, but every individual state what we'll do. And there was a very encouraging announcement by Abbott Labs last week. One last week and one yesterday about some of the new testing that is being put into the market, one test of which will actually give a result within 5 to 13 minutes. To the extent that can scale, and to the extent we have a relatively cohesive identification of the virus response, then we can start to look more toward models like Taiwan, Singapore, Wuhan, and China, and a few other jurisdictions about when the crest would be and when we could see a decrease. To the extent we move in that direction, which just seems we as a nation are mobilizing in that direction, then the last variation there would be the federal stimulus. And so what that would include, I can tell you we don't have enough time probably on this session to go into all the detail. It's a 900-page bill. We were directly involved in a lot of it. I've read just about all of it. I can tell you it is extremely comprehensive, and I was very impressed at the learnings that were drawn from the 2008 crisis that were inserted into this bill. Things like not just immediate mortgage forbearance for those impacted, but also credit forgiveness for them as well. So non-reporting to credit agencies of those who are taking advantage of recently passed laws to not pay on mortgages, rent, etc. Those two things alone will help the real estate market more than just about anything else will. Jeff mentioned the mortgage-backed securities buying that's taken place, over $75 billion in approved buying in the second stimulus package, unlimited authority now for the Fed to continue buying. They haven't even needed to do as much buying as they're authorized to do thus far to be able to support those markets, which has been absolutely terrific. But there's a vast number of things, including self-employed, not just independent contractors, but self-employed business owners qualifying for programs for which they never qualified before, waiver of personal guarantees for loans below $200,000, waiver of fees, lending institutions receiving higher payment from the SBA and other institutions to be able to get money out the door faster, tighter borrowing capacity timelines like 60 days as opposed to 120 days, a number of these things. There are so many provisions within that bill, and that doesn't even get into some of the affordable housing and above 70-year-old housing subsidies, as well as some of the specific benefits to renters. All of those things draw directly on lessons learned in the Great Recession of things that accidentally exacerbated the crisis. Even getting into the details of how we account for things on the books when they need to be marked to market when there is a forbearance in effect. So for instance, mortgage-backed securities, there was a time when even securities holders would have liked to keep people in homes, but they were precluded from doing so because of their fiduciary obligation on the equity holders. All of that has been touched upon in this most recent CARES legislation to allow banks to not mark to market until following the crisis in a number of really important areas that touch on like just generally accepted accounting principles, as well as regulatory guidelines of what goes into the bad bucket and the good bucket. I mention a lot of these things just to give people a sense of how when you see the headline, the government threw the kitchen sink at this, they did, but also they threw every lesson that's been learned in the last decade and a half at this as well. And I cannot emphasize enough what a difference that's going to make on the property market, which was nowhere near as volatile as the financial markets that you've oftentimes seen a lot more volatility in. The property market is not historically that. It never has been, and it only is in times of tremendous overheating or in that exacerbated downturn like we had in the Great Recession. So I'm extremely hopeful and confident that a lot of the work has been done, the infrastructure has been laid to allow, once we do see the crest, the property market to continue very strongly thereafter. I'll just add, I think everyone who's been quarantined in their home and sheltering in place is probably already planning home renovations. So, handymen are probably going to double their rates coming out of this, but I think I'm feeling very confident about what we're going to see when we come out of this.
Yeah, it's funny you said that. Jeff, I think that to add a little color to that, I really hope that you or your contemporaries come up with some type of product whereby someone can buy an existing home and kind of put that, amortize the actual renovation over 30 years. I really think, this is just my 2 cents, that the resale market obviously has been impacted, and it's been challenging because everybody and their brother wants new. And I think there's so many homes out there that are like such value propositions right now, but we've got to focus on a product right now. And you mark my word, I'm sure someone's going to come up with a great one. That is, you amortize your renovation over a series of time. Do you have a product like that? Do you know of a product like this?
Those products exist, and maybe a little bit more so in theory than they do in actual practicality. They exist. They're not always the easiest to use, but yeah, it would be a key to see if somebody actually uses it and streamlines it and makes it a little bit easier to use. And important to note, I've had a couple people and friends pass me notes that, on the essential list is building and construction. So just for anybody out there that is wondering, that is still ongoing. That is still working and happening. And I agree, it's going to be, we already saw it was going to be a big part of the housing market going forward. You have a lot of young people and people in general that love HGTV. Yep. They want to see the place. They don't love all the pieces of inventory that are sitting out there. They want to somehow retrofit and make it theirs. So there are some products. Anybody that would reach out to a lender, start talking to them in advance and go through all, the products that are out there to help them. Sometimes people don't even need it to get what their desired outcome is. So just start the conversation and have it early. Now would be a good time. So
it makes sense. And, you can't see in the background, but every house I've ever done, I added value to it, and it was very rewarding from a financial perspective, but also my perspective. I mean, there's so many homes out there, in Illinois versus Naples, Florida. There's a lack of inventory in Naples, Florida. In Illinois, we have a lot of inventory, and some of it is going to move now, I think, more than before, because people are really starting to realize what they like and don't like about where they are. So it's just kind of interesting, but thank you so much. Okay, how about 2 more questions? This one's from Lake Forest. We are trying to list our house as part of a job relocation. We're very unsure if we should list now or wait a bit. What do you think? Ryan, you want to take that?
Sure. So first of all, speaking with Dawn is a good place to start. Every situation is definitely very unique. I will say the speculation that I've heard around what the optimal approach to this market is, I don't necessarily buy into. So if it made sense for you to buy, it probably still makes sense for you to buy. If it did not make sense for you to sell, then I would advise strongly against any kind of panic selling. We have not seen asset price movement right now that would lead me to believe that anyone should be factoring that significantly into their equation. Now, if something's changed in your personal circumstance as a result of COVID-19, then obviously that should be factored in. But I don't think timing this market is going to make a lot of sense beyond the next, say, couple of weeks. Right now, there's a lot of noise. Obviously, being able to get the property ready for sale, as Dawn or other of our colleagues would do, is something that may be slightly constrained right now. So it may be that for the next couple of weeks, there may be some timing you take into account. But beyond that, if it's the right time for you to sell, then you should hire the right professional with the right firm, of course, and then take the right advice as to how to position that home to sell in exactly that moment of market, which is not the same in any year or within any point of the year. So I think you can test the market. The great thing about the way that we sell homes, of course, is that you get feedback from the market almost instantly. You can make an informed decision then once you get that feedback.
Well said. Okay, so how about one more question and then we'll wrap it up. This one's for Ryan too. Let's see. Let me see. Boy, I should have worn my glasses. Dawn, as well as many high local producing brokers, do significant business with local builders and investors. This trend of redeveloping the country's established communities with new construction has been ongoing here in Dawn's Market for over 30 years. As you know, the trend has expanded into smaller metro and suburban markets throughout the United States and beyond. What is your opinion on the infill redevelopment trend overall, and what impact do you think the virus will have on replacing older house stock with something new moving forward?
So I'm a big believer pre-COVID-19 and post-COVID-19 in the infill development and redevelopment opportunities throughout the country, in part because the pressure to do so has been driven in large part by a decrease in entry and mid-level housing stock from the largest builders in the country, as in falling well below half of the level that we would need to see in order to just meet replacement rate. Since builders it's a capital intensive industry, and they were somewhat skittish coming out of the Great Recession, and they continue to be, the large production builders are looking at this particular moment and saying, one, their demand hasn't declined a lot. However, two, they're taking precautions and being safe. When they're safe today, that likely decreases the overall inventory they produce tomorrow. So I think all you're going to see is the pressure that drove infill development increase a little bit in the balance of 2020, meaning infill will continue through 2020 and 2021 until the production builders really ramp up their production, which in most parts of the country is just geographically constrained. So I think infill is here to stay for quite some time.
Great. Okay, I think we are good. I know we have, I think there's like over 34 questions that we didn't get to, and I promise you, if you DM me, email me, I will take all these questions and I will siphon them off to the appropriate people. And I know I speak on behalf of my panelists that they will get back to, or I will get back to you. Your questions are important. You're important to us, and we respect your time, but we're trying to make this efficient, like I said. So thank you so much for your time. I think this has been awesome. I hope you learned a lot. I know I did. I want to say one thing. I'm very hopeful. I really think we're going to be better for this as we've been in the past. I think the spring and summer market, I think, is usually our best. And I think now it's going to go into fall, winter. I think we're going to wind up in such a better position when we get done with all this, because so many people on so many levels are learning so much and putting themselves out there and doing business differently than we have. And I think if we combine it with what we've been doing, I think it's an incredible opportunity for all of us. Now more than ever, and so grateful. Our company is celebrating 114 years in this business. That means we made it through the Great Depression. We made it through the 1987 stock market crash, the 2008 housing crash. We will make this together. And as a company, last year, we sold $170 billion in real estate. We're the number one brokerage in almost every category. We've done over 300 billion transactions in 2019. And being powered by a global company that is the greatest technology, experience, leadership, as you can see, a strategy team that's the best in the business, combined with a DMG local expert, I think it's a can't-lose proposition. And I'm just telling you, I have more energy now. It's all bottled up because all of those of you that know me know I'm a people person and I need to be out there with you, but I have so much pent-up energy and so many things I want to do and we're implementing on a daily basis here. I just want to thank you all for tuning in. We're doing DMG live realtor tours, not realtor tours, open houses with all my markets, the North Shore, City, Naples, and the Western Suburbs. So all my local experts will be featuring 3 homes every Saturday and Sunday at 2 o'clock so you can see them. And they're not just videos, you guys. They're doing one thing that I will promise you, a good expert that knows what they're doing will never be replaced by technology, ever, 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 because we can provide data and knowledge and color that no algorithm in the world can come up with. So stay tuned. I hope you enjoyed this. We're going to have another DMG series coming up soon. I wish you all health, safety, and I'll see you on the other side of this. Thank you so much, panelists. I really appreciate your time today. Thank you for giving up an hour on your Sunday.
Thank you, Dawn, for all you're doing.
Okay.
Thank you, everyone.
Take care.
Thanks, everybody.
Bye, guys.
Bye.
Thank you.